Ladies and gentlemen, welcome. My name is Alex Dworkin and I'm a managing partner at 4D Capital. We specialize in a very unique mathematical approach to the stock market where we analyze the market and individual stocks in three-dimensional space. And when we do, essentially perfect order emerges. On top of that, we've developed a number of very powerful timing indicators over the years. And when we combine both of them together, we can very often predict what the overall stock market or individual stocks will do on multiple time frames, whether it's short-term or long-term, doesn't really matter. We can do it. And we can predict what those stocks are going to do going forward. So I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim. So today we're going to be looking at Procter Gamble. Procter Gamble is one of our 52 mega cap stocks that we update twice a year. And we're just going to talk about what it's doing now, what it's going to do in the future. Before we do, let me just do a very quick introduction of our firm, what we do and what we look for. So our primary goal is to essentially identify stocks that will 2x, 5x, 10x going forward. And obviously, who doesn't have that goal, right? But we have a secret weapon in our search for such stocks. We have developed a very powerful software that works with our three-dimensional calculations. And what we can do, essentially, is we can ask our software, for example, to scan the entire S&P 500 and identify upcoming turning points, whether it's tops or bottoms, it doesn't really matter. We're able to identify both. But we are the most interested in bottoms because it is from those junctures that our stocks will increase quite substantially. As you know, it is much more dangerous to be on the short side. Your gains are limited unless you're playing with options. So we're looking for those very important bottoms, and then our software is able to calculate, essentially, once that bottom is achieved, how far the stock will go going forward, whether it's going to increase 2x, 5x, 10x, and how long it's going to take. So obviously we're looking for those stocks that will appreciate the most within the shortest period of time, and we can do that. Now, this sounds quite interesting. Well, perhaps not interesting, but I would imagine a lot of people would be skeptical. So what we do a demonstration of our software, and we do it on our webinar days. Next one is coming up on October 31st, 12 p.m. Eastern Time, where we talk about the overall composition of the stock market, which we typically shy away from. We also showcase our software, and we tell you how we calculate the market in three-dimensional space. So if you would be interested, definitely sign up. The link is in the description of this video. And the spacing is limited. It's only available to 10 people. So the sooner you register, the better it's going to be. So with that in mind, let's just very quickly shift to Procter Gamble, see what it's going to do going forward, and hopefully you can benefit from that. So I'm going to describe our work in a little bit more detail to the people who are not familiar with our work, which is quite a few people that are watching our videos, etc. If you're familiar with what I'm about to say, please fast forward probably 2 to 3 minutes, and we're going to be in the midst of Procter & Gamble analysis. So the triangles you see on top of the top and the bottom of the chart is what we call cycle composites. And this is a very simplistic representation of a very complex mathematical concept. What we do is we scan the chart back in three-dimensional space. We identify these cycle composites, and we project them into the future. Now, the top ones are responsible for the tops, as you can see, and the bottom ones are responsible for the bottoms. And we can narrow down, these are long-term you see on the chart, but we can narrow them down much more into almost intraday composition. Now, what makes matter a little bit more difficult is there are typically multiple composites running for the bottom and the top. For example, I use the Dow Jones as an example. Always on the Dow Jones, there are 2 bottom composites and 2 upper composites. But when you combine them both together, you can very closely replicate what you see on a 2-dimensional time and price chart in terms of the movement of those stocks. Okay. What I like to say is that these cycle composites will get you into the neighborhood of very important turning point. Okay. Depending on the length of the cycle we're dealing with, these are long-term. They can be 3 years, 5 years, 7 years, even 9 to 10 years. So I typically say there's probably plus or minus 2 months trading variance associated with any important top and bottom that is being put in place. But then we have cycle clusters. is the lines you see on the chart here. And cycle clusters are also a very complex representation of very complex mathematical concept. And what we do, we also scan the chart back in multidimensional space, but this time around we use our proprietary cycles that we've developed over the years. We identify those cycles and we project them into the future. And here's the most important factor that we found. We found that important tops and bottoms in stocks occur not when any particular cycle arrives, but when there's a cluster of cycles that arrives at the same time. So if we have 2, 5, 10 cycles arriving on the same day, for example, rest assured there's going to be a turning point there. Now, whether it's long-term or short-term, depending if you're working with the long-term chart or the short-term chart. But nevertheless, once again, I use the Dow Jones as an example. In March 6 of 2009, that very important bottom that we had, there were 15 longer-term cycles arriving on March 6 plus or minus 1 trading day. So they all kind of nested together, and that's what I'm talking about when I say cycle clusters. So if you're aware of that, if you're aware of how that works, you know that there's going to be a very important turning point at that juncture. Okay? So what does it tell us? Basically, now let's get into the analysis for Procter Gamble. Basically, what Procter Gamble is doing, it put in the top here. We had a projection in earlier this year, when we were looking at the stock, that the stock is going to reach approximately $190 a share. It didn't get quite there. It went to approximately the top was, I think, 181, I believe. So it came very close to our ultimate target. And once that top is put in place, then the stock is going to decline into the second half of 2006. And as you can see, that is exactly what's going on here. If you look at the cycles, if you look at this cycle composite, if you will, it is projecting that the bottom for the stock will arrive in October 27th of 2026. Once again, with this particular composite, there's a certain margin of error associated with it. So, but it's pretty close. Let's say October of 2026, fourth quarter of 2026, we're going to see a very important bottom for Procter Gamble. And once that bottom is achieved, it's going to increase quite rapidly into this particular top, major cycle top that is scheduled for 2029. Okay, and at that time we're going to break above this particular top. We're going to see all new all-time highs for the stock, and that's essentially the forecast for Procter & Gamble. Now the question becomes, how far down is it going to go? Where the bottom is? Where the bottom is. We kind of talked about when the bottom is, but this particular cluster right here, these are the dots you see here are exact three-dimensional calculations that identify very important points of force in multidimensional space for that particular stock, or this particular stock. In this case, Procter & Gamble. And what it's showing you is that this very important cluster is at approximately $100 a share. And let me show you another one of our calculations. This is yet another representation of our three-dimensional calculations. Now, I know it doesn't make any sense to you, but it makes a lot of sense to us. And basically what it's saying is that it's going to decline into this area as well. Once again, approximately $100 a share. And once this bottom is put in place, it's going to reverse and it's going to increase. As a matter of fact, let me show you. It might take a few seconds, but let me show you the power of our calculations and how we can project what that stock is going to do going in the future when with very simplistic approach. So what I'm going to do is I'm going to project from the top here that we had earlier this year, and I'm going to project into the bottom, which is approximately $100 a share. Okay. And this is, I want you to see the incredible power of our calculations. So once that juncture is reached, I mean, we can basically what I'm telling you is that we can already tell you today, once that bottom is reached, it hasn't been confirmed yet. The stock is moving in that direction, but according to our calculations, we will get there by the fourth quarter of 2026. And after that bottom is put in place, the stock's going to reverse. The stock's going to reverse here and going to go higher. Now, this particular region you see here is a possible completion point for the bounce, right? That's one interpretation of it. But from our experience, this region is always broken, and the stock is going to go to at least here by 2029. So let's see. The level here is $200 to $220 a share. But if you're familiar with our work, typically what the darker green region means, it means that there's a higher mathematical probability that the stock is not going to top here, but it's going to top approximately here. And if we click on this level, it is at $250 a share. So from $100 a share to $250 a share, you do the math. That's approximately 150% gain, and not bad, particularly if you can time the bottom right away, and if you add options into the mix and all of that good stuff you can make with quite significant gain. But the point I'm trying to make here is that look how powerful this is. We already know the bottom, and we can project from the bottom exactly the extent of the move. Okay, so this is extent of the move in price. But if we go back to our chart, our previous chart right here, we already know the timing associated with that particular time, and that timing is July of 2029, which lines up with the overall composition of the market. And so forth. Not very important, but for our purposes, it's very important because it's going to go from the bottom here. Within 2.5 years, it's going to appreciate 150%. There's very little risk associated with this because we know that if, for example, it breaks below a certain level, then the forecast is voided. Something is not working for whatever reason, doesn't really matter. But we essentially walk away with tiny losses, as an example. But at the same time, we position the entire portfolio not in terms of the Procter Gamble, but I mean in terms of other stock for significant gains. But I guess you can argue for Procter Gamble as well. 150% gain within 2.5 years is nothing to sneeze at. So that's it for Procter Gamble. Thank you very much for spending a little bit of your time with us. Let's see, I already talked about the webinar that's coming up on October 31st. Once again, link in the description of the video. We talk about a lot of very interesting stuff, so I do encourage you to sign up. On top of that, we have a free trial associated with our service. If you would be interested, please request it. Once again, the link in the description of the video. There's no strings attached, no credit cards, none of that stuff. What I do offer is a wealth of information, not only in terms of the overall composition of the stock market. We do intraday work, we do the 52 mega cap stocks, we do fast movers, we do super equities. There's just a treasure trove of information within our service that pretty much anyone can benefit from, and I would argue quite substantially. We also have trading. That's one thing I forgot to mention. So that's it for today. Thank you very much for your time. We'll be back with another stock tomorrow. Bye-bye.